In today's video, I'll share a simple setup using market internals along with specific triggers for both day traders and swing traders alike. The overall idea is based off of this likely trend exhaustion signal that's now printing with today's closing print inside of the Cumulative Tick Pro indicator. For all Volatility Box members, you can download this indicator to follow along and even test on other markets from our website. That's tosindicators.com/indicators. And there, look for Cumulative Tick Pro, and you can download it to follow along. Now, I have the indicator loaded on a chart of the SPY ETF. I have a 5-day, and let's expand this to something like 15 days so we can study past experiences of this as well. And I have extended hours turned on. Now, first thing to keep in mind before we even take a look at the signal, we've now entered that supply zone that we've been talking about for quite some time. So already here we have our bearish lens on, and we have a bearish channel that we're currently still continuing to fill out. In terms of key magnetic areas, we have the level 400 above us that might act as a magnet of resistance. Now, coming inside of a chart on that 5-minute time frame, with today's activity, we have the cumulative ticks telling us that, hey, this bullish trend that we saw today is likely to exhaust tomorrow. So keep an eye out for that bearish trend. Now, our trigger for this, and this is for the day traders out there, is looking for this red arrow on the Cumulative Tick Pro indicator. It basically tells us that we're now looking for the internals to exhaust and support this idea that price action is going to now revert back to the mean. That's the overall premise of this setup. Let's take a look at what happened previous times we've seen that likely trend exhaustion. The most recent one was yesterday, Wednesday's trading activity. Here we had a bearish likely trend exhaustion, so the tick's telling us we're now looking for a bullish move. This continuation of the bearish trend is unlikely. And with today's activity here, not only did we have a strong pre-market, but we continue to rally into the day, so much so that we've now even triggered our bullish trend exhaustion. Let's come back, find some more examples as well of the same signal. So coming back, maybe I need to expand this from 5 days back to that 15 days. So take a look, coming back, the first time we had this signal, October 28th here. A similar bullish trend exhaustion. This was Friday's trading activity, so Monday's open is right here, pre-market, and this is Monday's open. Take a look at when we had those signals on that 5-minute time frame chart. 5-minute signals, we see the flush down lower. This is what we're looking for, and we'll take advantage of this move with 0 days to expiration options. Come back for some other examples as well here. This is the same October 28th. This is October 25th, likely trend exhaustion. Morning here, we have that morning bullish pump. Once we get the signal, that's our cue to finally enter that put position in terms of the 0 days to expiration options, trying to maximize in terms of the direction along with minimize theta decay associated with that 0 days to expiration position here. That's the goal of this. That's why you need to patiently wait for the trigger as opposed to jumping ahead of the gun, considering you might have some morning pumps similar to the ones we saw here. Now keep coming back. One more example. This is October 21st, Friday's activity as well. Monday comes along, that 5-minute bearish signal gives us that small reversion to the mean. Nothing too substantial here compared to some of the other examples that we've seen here. So end idea one more time. We have this bullish trend exhaustion. We're looking for that trend to exhaust tomorrow. We may have a morning pump. Regardless of that, in terms of our trigger signal, it's once we see this bearish trigger, that's our cue to finally get in. Now, in terms of the option strike, I'll be looking at the at-the-money options whenever that signal does print, with the 0 days to expiration expiring tomorrow, Friday's activity. Hopefully, by the time the signal prints, these options are also a little bit cheaper than they were to start off the morning with the opening bell. Now let's move on to playing the same idea, but using a bit more of a swing trading approach. There, I'm going to switch over to a 30-minute time frame chart here. The overall idea is we're extended using the market internals. We're extended here even using our Keltner channel wedges. We're seeing them plot, telling us that, hey, on that 30-minute time frame, we're well outside of that three-factor Keltner channel on the upper band. And we're now waiting for our overbought confirmation to tell us that, hey, we can now participate to the downside. The same setup exists on the 30-minute time frame chart and also on the 1-hour time frame chart, which might be honestly a little bit better for those of you that are looking to swing trade this. Here's a past example of what we're looking for. Keltner channel wedges. We see that edge signal confirmation. This is our overbought signal here telling us that, hey, we're now looking for price action to go away from this overall region and start to make a move in the opposite direction. Same idea as what we're looking for here in terms of the targets or the mean to target. For me, that's the market pulse indicator. On the 1 hour, that's 388 for those puts. And on the 30-minute time frame chart, that's 390 for the puts, with the market pulse being a little bit higher. Again, the trigger condition here, though, is that edge signal confirmation. We're waiting for the overbought confirmation that tells us that, hey, this trend is now exhausted. And from a swing trading basis, we have a very clear stop above that last pivot high. We have a very clear target with the reversion to the mean, and a very clear place to try and capture runners if in case this does happen to be the supply zone that we're now holding, looking to try and play this larger move back down to at least closer to that midline of this overall channel. All right, so let's do a quick summary before we close this video out. So on that 5-minute time frame chart, we have our market internals telling us that trend is likely to exhaust tomorrow. This bullish trend is unlikely to continue. For day traders, the trigger we're looking for is this bearish signal off of the Cumulative Tick Pro indicator. I'll be using a 5-minute chart of the S&P with extended hours turned on. For those of you that are swing traders, we have the 30-minute time frame and the 1-hour time frame, both of which are setting up some really nice cup-like patterns from that V-shaped reversal idea. And we're waiting for the trigger here, the bearish edge signal confirmation, to try and target the market pulse as our reversion to the mean. Hope you found this video useful. Take care, everyone. Good luck trading the rest of this week, and I'll see you in our next update.